Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of Facebook today, or Meta, I should say. It is October 31st, Halloween. This is going to look at a longer term view, so I think this will still sort of hold true if you watch it, let's say, even a month from now, because we are going to look at really big picture charts as we do on this channel. We time the market without predicting the market here. And I think Facebook, or Meta, sorry, that's going to take some time to get used to that. We'll probably set up some kind of buying opportunity eventually. But for now, patience is the order of the day. Now let's look at this chart. So this is your yearly chart, your annual chart. It means every candle here is an entire year of price action. I had drawn these lines earlier at some point. I was looking at this. And the idea is that each of these, each of these candles is a year, right? And so each low point of each candle is the low point for that year. That's important because it means, so this is the year 2020, for instance, right? Once we're below the low from that year, that means any purchase for any point in the year of 2020 is now underwater, right? Now, obviously, you could have gotten in earlier, like here or here or here, whatever, but any purchase that was made here is underwater because the lowest price you could have possibly gotten was the low, right? So that's important. Once we broke below the low from below 2021, that was all the way up at 244, right? That was your first sort of warning signal, right? This line here, like, uh-oh, something is wrong. It doesn't always follow through, right? That's what happens, right? Sometimes price doesn't follow through in the direction that it's moving. But this is just called respecting risk. That was your chance to okay, I'm going to pull the ripcord. And then we went below the low from 2020, right? So that's at 137. We're quite a distance below that now, here at 93. We're also below the low from 2019, right? And we're below the low from 2018. We're also below the low from 2017. You're seeing a pattern, right? We've almost kind of rolled back in time. And so we're back to 2016 now, essentially. And for all intents and purposes, all of these pivots could get taken out. Doesn't mean they will, and doesn't mean that we think that they should or will. But that's a scenario that you have to be prepared for. So $72 area, right? Call it the 70s or mid 70s. That's a long way down from here. I mean, maybe you see some price reaction around, let's say, the $90 area, that's your low from 2016. But we probably have a date in the mid 70s, right? And then it's a question, do we come all the way down to 53? And I think I might have tweeted about this. So this is kind of the video version of that tweet, if you will. There's been just a lot of conversation about these stocks that have just been chopped up. And so good to kind of look at the actual price action. And so that's your kind of yearly picture. And the other thing I'll just call out, again, as we think about cycles, as we think about how to really characterize price action, 2021 is now a giant swing low, or excuse me, a giant swing high, right? The definition of a swing high is when price makes a high and then the subsequent candle or some subsequent candle, doesn't have to be the immediate next subsequent candle, but some subsequent candle then makes a low below the low from the candle that marked that high, right? I hope that makes sense. And if you've been watching this channel, that I hope you should be picking this up. 2021, we made that high. The low from that high, from that candle, again, we talked about that, it was 244.61s, right? So once we went below that made this a swing high. And now there's always a possibility that you get some kind of false breakdown. We get a violent reversal up. That's clearly not what happened. We just kept dropping. Now, of course, there were rallies in here. And that list looks like it's just down only, but there were certainly some rallies in here. But this gives you a real measure. And I always start with the big picture, because that just tells you the direction of the trend, right? So if you want to go long here, you're doing that against the trend. I mean, look at this thing. And there's no wick on this. You can't see any wick. I guess there's a tiny, tiny wick. So now let's zoom in. How's the monthly looking? Oh my God, free fall. And notice these lines that we just drew. Or I should say, the line that we just drew, or yeah, right. Those lines that were on that chart are right here, right? This is just your monthly view. And on the monthly, you can kind of really see the downtrend unfold, right? So we did this, and then we had this little bounce. That's a lower high, right? And we did this. Then we had this little bounce. What is that? It's a lower high, right? Then we did this. So at some point, we're going to get a bounce. Maybe all the way up to like around the 120s even, right? And then we'll get another move lower. And then that, right? Now, that's just a feature of the way price action works, right? And if we're going to go significant, if we're going to find ourselves down in the 70s, we'll probably retrace first before the drop down into that, because that's just how price moves. Lower lows and lower highs, right? Lower lows and lower highs. It's just the way trends kind of unfold. And we talked about what those levels, right? Like the low 70s, and you can see the pivot here, right? That 70, this is 72 approximately, I believe. And then you have your 50s, which is like right this cluster here. And this is your monthly chart, right? So you can see you had this little consolidation here on the monthly level in 2014. That could be an area where price revisits eventually, if we continue. And this teal line is your 50-month moving average. We've obviously sliced right through it. Previous declines kissed it and then moved higher. This one kind of like touched it again and then moved significantly higher. Now we've sliced below it, and you can even argue, right, we actually made a lower high, right? This is like you could call this a false breakout right at the 50-month moving average. So also not a great sign. And then if we look at the weekly, we'll just be watching for signs of reversal right now. Now, this was a pretty massive cluster of consolidation that then just kind of spilled over. And at some point, we're going to get some more consolidation. That would be the point to position short, if one is inclined to position short, obviously. Because at some point, we're like that's essentially going to be your weekly cycle low. I suspect that's what we're going to see, right? We're going to get a weekly cycle low that's going to have a really feeble bounce to it, which is to say it's going to be left translated, like similar to this, right? Like this was a low, right? And then we just consolidated for 1, 2, 3, 4, 5, 6, 7 weeks. A little double top action, and then we kind of begin the cascade lower. So at some point, we probably see something like that. Now, we could continue the free fall for quite a bit before that. I mean, look at this. This looks like it has no signs of stopping, yet at the same time, this angle of descent is so steep, so sharp, that you do imagine there's going to be some retracement eventually, like we just talked about on the monthly chart. And this yellow line is your 200 period moving average. So in this case, it's a weekly chart, so it's a 200-week moving average. And then finally, we zoom in on the daily. And yeah, that's important to note that this whole thing was a gap down, right? And so that gap becomes a really important level, right? So the high for the day that we had the gap down was 102.50. So that becomes an important inflection point, right? If we can get above 102.50, then, I mean, the other side of this gap is at 123. Doesn't mean we're going to get to the other side of the gap by any means. But at the very least, as we talk about like a potential retracement, that's actually a pretty good, like something like that, right? Like that's a pretty good potential target, right? Like we make a little move up to like 100, 101, right? Like maybe we don't get quite to 102, 60, 62, right? That's like, another 10% up from here. And then we kind of get the next leg down, something like that. You could totally see that. So needless to say, a lot of caution warranted, but there are very clear levels that we're kind of watching that really stand out on the yearly chart. They're going to come into focus at some point on the monthly and weekly charts. On the weekly chart, what we're really watching for is some kind of like little swing low, some kind of consolidation like this or this. That would give us our chance to short, again, if one were inclined to short, because price can't just continue to drop in a straight line. So that's the lay of the land for Facebook. If nothing else, a great shorting opportunity coming up. But coming out of that short, there's going to be a point where, it'll be right to be long. And we'll certainly be talking about it on this channel. I should say if and when that comes around. We'll see.